Hello, Stephen Koukoulas here, Economist in residence with Zagga. And boy, what a month we've had for the economy, for economic policy. I think I'll start with the RBA. Now, they've just announced an on-hold decision for official interest rates, and no real surprises after that inflation reading that we saw about a week or so ago that showed elevated inflation for the quarter. The RBA have signalled and made it fairly clear in their forecast that there's something of a dilemma emerging for them and for the economy more broadly, and that is the fight against this possible temporary upturn in inflation, hoping it's only temporary, not a more permanent upshift, versus the unambiguous lift in the unemployment rate. Now, the RBA has a dual mandate, and by that I mean it's got to target both full employment, keeping the economy fully employed, unemployment low in other words, and keeping inflation around about 2.5%. Now, sometimes they're conflicted, and that's what's happening right now. Do they cut interest rates because the unemployment rate is edging higher, and it is, or do they hike rates because inflation might be moving a little bit higher and above the 2.5% target range? So that's the dilemma for the RBA. Now, more broadly, I think that there's enough coming through in the data still to suggest that the economy is subdued while we've got better economic news than we did 6 and 12 months ago. No doubt about that. Some of the indicators are a little bit more fickle. Household spending, which makes up an important part of the economy. They had a very strong June quarter. Alas, in the September quarter data just released recently, we only had a 0.2% increase in real household spending. So that's not a great result. So consumers, where sentiment is still erring on the side of negative, are still hunkering down. They're still being very cautious in their spending. And that's something that I think will feed into the RBA's thinking in the fullness of time. And thankfully, after 2 very weak months of building approvals, we had a nice upturn in the number of new dwelling approvals in the month of September. Very volatile. The main catalyst for that volatility is the approval of apartment blocks. So I think it was up 26% in the month. So obviously that's going to be the way of a lot of the new construction going on, townhouses, apartments rather than freestanding dwellings. So that's encouraging to see that come through. On the labour market, 4.5% unemployment rate. We had the job ads series falling again to a fresh cyclical low just recently too. That to me suggests that the unemployment inflation dilemma will be squarely on the unemployment side in the months ahead. So the door's still open for the RBA to cut interest rates, but from the RBA's own mouth is that they do want to see not just 1 month, not 2 months, not 3 months even, of lower inflation, and confirming that that September quarter number was more of a transitory issue before they move interest rates again. So for the here and now, the economy muddling along, not bad, certainly not strong, doing okay as they say. Inflation perhaps a little bit elevated, unemployment starting to increase a bit more than we would perhaps like to see. So for the RBA, it's on hold fairly clearly until we get into the new year. But for the economy more broadly, we're hoping that consumers do start to rekindle their spending spirits, if that's the right word, spend up ahead of the Christmas period and the economy's a bit stronger. Vitally important too will be any lift and further lift in the number of dwelling approvals. That looks to be still very much on the cards. There's some early signs that some of that pro-growth and the easing of some of the red tape restrictions on building approvals is starting to come through. Early days, don't get me wrong, but there's a lot going on in the economy right now. So on behalf of Zagga, I look forward to chatting to you in future. Very mixed times for the economy. I think it's fair to say some of us are still sort of trying to grapple with what's going on, the Reserve Bank are doing and the like. So I look forward to chatting to you next time. All the best. Stephen Koukoulas signing off. Thank you.